Alright trader, welcome to this video. Today I'll be talking about a couple of things, and I personally like the content I'll be sharing today. In fact, in my opinion, this is one of the most important video you would ever watch in this channel. Alright, so I'll be talking about the previous week. I'll review the previous week, and then I would project into the incoming week, and then more importantly, in between, I'm going to discuss the one thing that changed it all for me as a trader. So do it to stick to the end of this video to be quick, brief, and precise. So first off, you already know I trade GBPUSD or any dollar related pair. Hence, our analysis always starts with the dollar indices. So if we go to the dollar quickly, you will discover that we are bullish, short-term bullish in the dollar. That is DXY, and I like doing from the higher time frame narrative, that is the weekly chart in this example. So I'm going to allow this to load, and this is the dollar chart from the weekly perspective. You can clearly see that we've had series of pushes to the upside, and we expect price to move towards that fair value gap at the top, denoted with the red and the blue line. Now, price currently needs to push to break this high. Price needs to break this high and then fill the gap before the long-term bearish movement. So we have always known that if DXY is bullish, then expect GBPUSD to be bearish. So because of this projection from the weekly time frame, higher time frame, we are expecting GBPUSD to be bearish. And it was with that expectation we traded the just concluded week, and we are projecting. By the way, this video was made October 30th, 2023. So whatever time you're watching this, you can always refer back to the dates and analyze with us. So I'm going to head over to GBPUSD, and you can see clearly from the weekly time frame we are having the opposite direction or expectation of what the dollar is to present. So I'll just quickly move over to the hourly chart and analyze the previous week. So the two lines you can see shows you what we had from Monday the previous week to Friday the previous week. So I'm going to take it from the 4-hour time frame so it will be more cleaner or clearer for you. So remember, we are trading off liquidity and structure. And if you have subscribed to our channel already, or you've watched our previous video, we have analyzed two structure or two pattern that will trade the market with. The first being in a bearish market condition, you want to see price do something like this, pull back, take that, and drops. The second pattern in a bearish condition, you want to see price do something like this, then this, and then pulls back, take this one off, and goes. We know the second one has hybrids. That means can also appear in format like this. Then you expect price to pull back, take that, and go. Simple and precise. So clearly from the 4-hour time frame, we can see price aggressively some weeks ago broke structure that way. And after breaking structure, what did we see happen? It broke the structure, left a high right there. So we expect that high to fail, extend it in time. So price kept doing all of those movements, and just above that high you can see there's a fair value gap right at the top. So that framed the reason for our sell. We expected price to take out this high that was created, more importantly react off the fair value gap. So this past week we allowed price to rally to that area, and then we look for the sell. Very clean and simple setup. So heading over to the 1-hour chart, you can see the reason price reacted off the area it did, or why the sell off from this area. Now another thing you can see from this chart is what we call BPR, or balanced price range. BPR, or balanced price range, where everything at the left will look like everything at the right. So this is like +1 -1, and if you're a good mathematician, you know that equals to 0. Now if you're getting value so far for this quick overview, please do it to like, subscribe, and comment value right on the comment section. This is how we help the algorithm, and we show support for this channel. So that is your BPR, or your balanced price range. where price goes to the upside and comes down almost the same way it went to the upside. So this area, I told our inner circle student, is as good as non-existent. So this is like a zero area. Hence, the following day, price need not pull back all the way inside before it drops. It just needed a little bit of pull, right? And then sold off. And then this area was beautifully positioned for Friday trade. So type 2 again, you have this, you have that, you expect that to fill and go. That's exactly what we had on Friday, and it was beautiful to take. So at the time of recording, we already see a high taken out here. We expect the fair value gap to be filled here, and we expect the drop to continue. Right. So this is just a recap of the markets following from the higher time frame analysis and all. And I would guarantee that, not guarantee, we actually did cash this trade. I personally caught that trade from the top here around that area, the first entry. I got another one here, and then I got this one finally on Friday. Now I have successfully done or kept my promise by showing you preview and then giving you view for the nearest future. Right, we are heavily bearish on GU because we are bullish on DXY. Right, now here is the thing that I shared with my students on Friday, and it has blown their minds away. You want to succeed as a trader, you want to make profit as a trader, yet you don't do the one singular thing that is required for you to succeed. Amongst other things, trading is more than technical analysis. It is more psychological than technical. Trading is 70% psychological and 30% technical. And by psychological, what I mean at this point in time is you journaling your trades. I would in subsequent videos show you how I journal. But please, if you are in this channel and at now you don't have a notebook, or you don't have a soft copy format where you can write your trades and what your journal entails, your risk, what you're looking at for before you trade, stop loss ratio with respect to percentage, your take profit percentage with respect to the risk to reward ratio, essentially what happened when the trade triggered, how did you feel an hour, 2 hours later, did you close at break even, your trade hit stop loss, what lesson did you learn? Please, whatever you cannot measure cannot grow. What you cannot measure cannot grow. So if you don't have a means to measure your progress, you are just changing yourself. This was the fact or the truth that I discovered so many months and years ago, some years back, that completely changed it for me. And what was it? Recording, journaling of my trade. As a trader, you must have something to pen down. The brain cannot be trusted. It's fickle. It's mixed with emotion. And then once your trade does not go in your direction, it's not enough to say, okay, next trade. But what did you learn from that experience? And what you learned, did you pen it down? If it is not written down, it is gone. Trust me, it is gone. And that is why you keep repeating the same mistakes over and over and over again. Here is a fact, trader. You cannot amount to anything much, truly, truly, if you don't have a means to record your trades. For example, I have all of this trade I showed you. I did not give any entry because this session or this video is essentially to jot you to start taking record. All of my activities for the previous week were recorded. Errors I made where I moved my stop loss too early and I got break even, I have noted that and I am going to improve on that the following week. If I keep repeating the same mistake, that means I am not learning from my previous mistake. And one way to learn is to write things down. So here is your take home. No much technical analysis for this video apart from what I have done earlier. Takeaway is to get a note. Soft copy, you can use, there are softwares online that can help you do that. But I recommend personally the old rugged hard copied notes and your pen. Get a trading plan. Your journal entails everything about this is a business. And if you don't treat it as such, you won't get the reward of a business. I hope this helps you, and more importantly, I hope you implement this. And then I am convinced within a month of you doing this consistently and building the character over time, you're going to be proud you did. Thank you so much for stopping by our channel today. I hope you gain a value or two. Again, if you're not yet subscribed, please do it to do that. Like, comment, share this video to other traders who are struggling, and let them come and learn and implement. The other series of videos I'll be loading will be technicals, and they will help you see markets in a better perspective. Once again, thank you for stopping by. Jay Okoli signing out. See you in the next video.